Another back to basics. Stops, why they matter, and when are gains real. This is my educational channel for stocks, the market, Bitcoin, gold, silver, and even a little real estate. Please check out the whole video for tons of insight and trade alerts. Thank you. This is Dan Max at eXp Realty, aka the Trading Agent, and I want to do a back to basic video on stops, why they matter, and just the trading psychology of why stops matter. So let's jump into the markets. As of the short term, talked about the Qs lagging. They made lower highs here in November and then a retest in December. I'm sorry, lower highs were in December. It's been lagging. Tech overall is lagging. If you're looking at your portfolio and you got stocks that are down 30, 40, 50%, telling you right now, that's typically not a good sign of the continuation to happen, like continuation of up later, especially if they run from single, double digits to hundreds of dollars. What usually happens when the markets correct, potentially a bear market is coming. Now be aware that higher rates might start one. You never know. I don't necessarily trust the Feds in that, but I do know there has been a rotation from risk on to more materials, commodities, industrial metals type of thing. We'll get into that here in a minute. But what's so important about stops? I always tell people your gains are not real until they're realized. And people will say, well, I don't want to use stops. Stocks always go higher. And it's like, and that thought process is the thing that ultimately kills people, because again, all it takes is you have to be wrong once on that belief in one stock, and gains that you had for weeks, months, maybe even years can go bye-bye. I mean, they literally can go disappear in the blink of an eye. So what I tell people all the time is have stops, trail stops, and just don't be scared if you need to rebuy and you need to buy back in. Like, that's the key to trading. Is this is a casino game. Stop, unless you're buying the S&P 500 ETF or the QQQ ETF, you have to trade stocks. I mean, they go up, they correct 30, 40, 50% at times, and they're volatile. Individual names, like I always tell people, like, you have to be aware that you're playing a casino game. Now, again, SPY, ETF, QQQ, you're betting on the long term of the overall market. Just be aware the holdings within those ETFs change. So companies like Peloton or Garmin, I mean, I've seen so many of these names, BlackBerry, Palm Pilot. I mean, it just goes all the way back. I mean, they all do well, and then they ultimately become dinosaurs and fossils, and they're stuck in the mud. They go nowhere forever. And what the point of it ultimately is with stops is, what is your goal here? Are you speculating, believing that you're always going to be right forever and that the stock is never going to run into competition? They're never going to have problems. The CEOs, the boards, are never going to get greedy and start doing stupid stuff with the money. You're just believing in certainty. Now, again, there's only one stock that survived, the Dow for the last 90 years. That's ExxonMobil. That's oil. Well, just be aware, like, that's what happens with stocks. Individual names. Again, Dow, S&P, Qs, they're going to change, like, the names inside of them. So that's where you have to be aware. I mean, I've seen this so many times. I mean, I had people ask me about Peloton, that got crushed. I remember Roku, people were saying, oh, that's the future. It's like, man, that's a double top. Goodbye. I mean, you can literally pull up every chart. If you know the names, study the past. Go look back at Microsoft. And I have this up here because I think a lot of people don't remember what happened to it for a really long time. It's not like they stopped making money in the 2000s, but this company literally went nowhere for decades. They had another similar run. They went, think about this as post-split. So look at all the splits they did too. I mean, it's single digits up to 60. And if you add all the splits in, I mean, it's an amazingly huge move. And then what happened for 10 years? Nothing. Absolutely nothing. And if you would have held that, you would have wanted to kick yourself in the face and just knock yourself out, because it took 16 years to get back up to the highs, and obviously went on here we go, another massive bull run. But when it ends, when do you sell? Like, I always tell people, like, when are you going to ultimately sell? Because along the way, there were backdrafts, and everyone's like, well, you should have been buying there. They're going higher. And it's like, hey, you know what? If that's what you want to do and you want to stick to it, fine. But ultimately, do not give this all back. Or stay in it forever. Because what could happen is, like every other stock, I mean, once you become the top of the mountain, the king of the jungle, everyone's gunning for you. Everyone's going to be coming after you. Everyone's going to look for you and your weaknesses to take over and exploit. So, I mean, the same conversation with Cisco. I mean, they basically were building out the internet with wireless technology and routers and connectivity, and that stock went absolutely apeshit. They're still around, but it took. I mean, they're still not even back at the highs. That's what's crazy about it. And so, what I'm warning people is, if you've got a great trade, you made a ton of money. I know you don't want to pay taxes, but you're playing a trading game. This is a freaking casino game. In a casino game, you ultimately what happens is if you always play and you never cash out, the house will take the money back. Again, keep that in mind. I don't know where to tell you to take your profits, but people are like, oh, I bought Tesla at $30 or $40 a share. I'm going to hold it forever. Okay, well, guess what? What if something comes out that's better than, say, Tesla, or a new technology comes out, or something changes about the markets where you could have bought the next Tesla, the next Microsoft, the next Apple, the next whatever. Like, that's where taking profits partially, rolling out, setting stops, and having the stops ultimately so that, say you bought some at 30, it runs up to 300, whatever. You're not giving it back below 200, 250, whatever number you need to have in your mind so that you realize your gains. Because if you do not realize your gains, you will be in purgatory at some point. I'm not saying this is the start of the bear market. Could be. I don't know. But I mean, I literally lived through an era when I started trading. This is what was going on. I lived through an era where I continued to trade and I had stops. I didn't get blown out. I took my money. I moved on to different things. Where I would get phone calls weekly, monthly, yearly from friends and family. Like, hey, you know, I still own that Cisco stock. What do you think? And my answer never changed. I wish you would have just had a stop. I wish you would have known that at a certain point, you take your money and you move on to something else, or you wait for it to drop. And these folks literally to this day still hate this stock because they held on to it. And again, I'm not saying Tesla, Apple, Microsoft, Facebook. I don't know if they become that. But what I am saying is that if you don't ever take your gains on these things, you will put yourself in a position at some point when the market changes, it will rotate into another sector. It will rotate into another leader that comes about. When that happens, your stock could go to the shithole, and it could go sideways, and you could, and the thing is, you're missing out on opportunity cost. Like your opportunity cost is what you're missing out on. Like, you could buy other things. I've said this a billion times about ARK. You know, everybody believes in the future. Well, at the high, everybody believes in the future, and look what's happened. You got to be aware. That's what the market does. This isn't the Q. This isn't the SPY. This isn't the Dow. This is an ETF, but it's the same kind of thing. They're holding a bunch of high growth, emerging stocks. Well, guess what? They emerged, they butterflied, they cocooned, they died. I hope this kind of stuff helps. If you have questions, I mean, again, the psychology of this is hard. I always want to believe that when I buy something, I'm going to be right. That's the reality. Like, if you have that mentality that you can't be wrong, then eventually one wrong will destroy you. So you have to believe that you can be wrong, you have stops, and you can rebuy if needed. Hope this kind of stuff helps, because if you're not doing this, and ultimately say the market does change, say this is the top, say it's next year, who knows? If you never take gains, you never use stops, your realized gains are not real. On paper, they're not real. So hope this helps. Psychology of this is really hard for people who just don't know what's going on or beginning. I mean, again, the kiss of death is winning at the casino because you think you can always play and win. The kiss of death in trading is never losing right off the start. And then all of a sudden, when things do change, all your wins go right to the bank, go right to the brokerage, go right to the casino. All right. Talk to you guys and gals soon.
Thanks for watching. If you got any questions, please stop by the Discord room. Link is in the description below. And also check out the other daily market recaps, live trade alerts, and educational videos. Thanks, and talk to you soon.